The primary asset of a gold mining company is the gold. You want all that gold. You can make a tremendous amount of money. All the stimulus actually sedates the real economy, and that's where the problem comes. Now they find out they own nothing.
What today's program is about is, as you know, Kim and I always talk about gold, silver, and Bitcoin, and we're hard asset people. Real estate, we're hard asset. We control the asset. So today, the discussion is going to be, how do you buy gold and silver in the paper form, primarily through gold miners and possibly the paper ETFs, GLD, SLV?
Well, first of all, stocks and bonds are thought of as paper assets. I mean, because, way back when you would get a paper share certificate, right, for your stock, or the bond was written on a piece of paper. But if you think about it, the real paper assets are bonds, right? Because all bonds is where you're promised to be paid pieces of paper by other people. You've loaned them dollars or some other currency, and they're going to pay you back in that paper. But even though you could have a paper share certificate in a stock, you actually own the business. You don't own the entire business. I mean, you would if you bought up every single share, but you own a fractional portion of that business. And to the extent that that business is comprised of hard assets, well, then you own a piece of those hard assets. And so when it comes to a gold mining company, the primary asset of a gold mining company is the gold in the mines, right? The gold that is still in the ground that they haven't dug up yet. And so if you're bullish on gold, you want to own a gold mine. You want all that gold, especially when you look at how these gold mining stocks are priced. You're actually getting a lot of gold for free because the market doesn't assign any value to a lot of the reserves, because based on the current gold price or based on the projected gold price in the future, the market doesn't think those reserves have any value because they don't think they're going to get mined. But if you end up getting a big rise in the price of gold, which is what I expect to happen, all of a sudden reserves that the market valued at zero suddenly become very valuable. And so if you buy the stocks now before that value is reflected in the share price, you can make a tremendous amount of money.
And I'm just wondering, as people look at gold from day to day and week to week, month to month, what causes the ups and downs? Is it people physically buying and selling? Is it emotion? Is it other social factors? What is it?
Well, there is a lot of cheap money that's sloshing around thanks to the Fed. And so there's a lot of hot money in all these markets. It's not just gold that got clobbered. Everything got clobbered. Right, the stock market went down, and gold went down as well. I mean, gold went down less percentage terms than the stock market, although gold stocks got clobbered more. There's a lot of volatility when it comes to the gold stocks, but I expect the gold stocks to come roaring back even stronger than the overall market. But what was the catalyst for this decline was the failure of the Fed to convince the markets that more stimulus is coming. I mean, more than what they've already promised. None of this is good for the economy. All the stimulus actually sedates the real economy. All it is inflation. And yes, it could prop up nominal asset prices, but at the expense of undermining the real economy. What you really should be buying as a result of all this is gold, is silver, and are these gold mining stocks. And the bad news is we're gonna get more stimulus, right? It's not gonna help the economy, but it is going to push the price of gold substantially higher, and gold stocks, I think, will disproportionately benefit from that gain, which is why, we own them.
So Peter, let me ask you a question on that, because there's a lot of rumor that COMEX and all this stuff, which I don't know much about, they're short of physical gold. Is that true or false?
Yeah, although, first of all, I wish this election was about capitalism versus socialism. Instead, it's about how much socialism we're going to have. The problem with the COMEX and all of the paper trading that goes on, a lot of people that trade in gold, I'm talking speculators, not what you're doing, Robert, where you're buying gold and you're putting it away. You're taking physical delivery of your coins and your bars, like customers of Schiff Gold. these are big time speculators that don't actually want any gold. They just want to gamble on the direction that gold's going to go in. And so they go in and buy gold, and they use a lot of leverage, right? They put down a small amount of money and they control a significant amount of gold. So this gives them a lot of leverage to the movement in the price. And what they end up doing is they buy the gold from other people who don't actually even have the gold. So they go into the futures market and sell something that they don't even have to somebody who really doesn't even want to buy it. And that all works out great so long as the buyer doesn't actually want the gold. As long as these contracts settle up by expiration, everybody can keep on playing the game. But here's what's going to happen one day. The people who are buying these contracts are actually going to want the gold. And so they're not going to sell the contract around expiration. They're going to give notice to the seller on the other side that they would like delivery of the gold. Yeah. And that's where the problem comes, because the short sellers won't be able to come up with the gold. But you've got lots of people who are selling gold that they don't have. And what's going to happen is when all these shorts have to scramble to try to find the gold to make good on their commitments, now you have all this real buying coming into the market. I mean, right now, the volume of paper gold trading on the futures market dwarfs what's actually being traded in the real market. But when all of a sudden they have to come up with real gold to settle on these delivery notices, that's when the price of gold can go ballistic. And in fact, what if the sellers can't afford it? They actually can't buy the gold at the higher price. They just default on their contracts. So now what happens? Now the COMEX has to make good on those obligations. But what if the COMEX doesn't have the money? And now the COMEX goes bankrupt. And now a bunch of people who bought gold through the futures market expecting to be able to take delivery, now they find out they own nothing because the counterparty can't make good on their promise.
That's one of the reasons that what you're doing, Peter, is you're actually selling the gold mine, not the futures contract.